So, very good evening, friends. We are here to Center Kolkata CA Study Circle today evening, as organized a seminar on 148A recent amendments, a way forward with the. One second. Yeah, I think it was there. So we have organized today's seminar on 148A, a way forward, with the some recent Supreme Court orders and changes in 148A, how the professionals will go, what are the verdicts of the court, and how we should proceed with the judgments. So we have with us Ramesh Ji Patodia, a well-known speaker among us in the Calcutta, and we have heard many seminars we have heard from him, but today is special with 148A. He will lighten us with his thoughts and the intricacy of the laws. Now requesting Pratik to please introduce before the August gathering Ramesh Ji Patodia. Pratik, please.
Thank you, Sandeep Ji.
Yeah.
Welcome, Ramesh sir. Very good evening to everyone. CA Ramesh Kumar Patodia has been in continuous practice as a chartered accountant in Kolkata for last 34 years and has been practicing mainly in consultancy and litigations in the field of direct tax, indirect tax, FEMA, etc. He advises several multinational corporations and has traveled extensively in India and abroad in connections with his professional practice. He is a regular speaker at several professional organizations and is a regular contributor to various publications by way of articles on professional topics. He has also written several books on professional topics, some being Incentive for Power Telecom Infrastructure Sector, a commentary on Section 80IA of Income Tax Act 1961, commentary on Hindu Undivided Family, complete guide to reassessment under Section 148 of Income Tax Act 1961, Direct Tax Vivad Se Vishwas Act 2000, etc. So it's an honor to have you, sir, today. The floor is with you. Thank you.
Over to you, sir, please.
Thank you, Sandeep Ji. Thank you, Pratik Ji, for nice introduction. Thank you, fellow members, chartered accountants, professionals. I think I am audible to all. There is a message that not audible.
You are audible.
Yes, sir. So, friends, today we are to discuss this most burning topic, I will say, in the entire country regarding the reassessment under Income Tax Act. And this reassessment has made us occupied, I think, if not since the onset of COVID till date. If one thing which has occupied everybody is this is one reassessment, I think. And it is kind of a tug of a war between the SSC and the department. And I can say with some sort of conviction that the High Court has come to the rescue of the SSC. At least for Calcutta High Court, I can say so. And recently, some of the important judgments which have been pronounced, particularly by Division Bench of Calcutta High Court by Justice Sivanganam, they give those judgments give me a ray of hope that at least on the limitation point, when the Supreme Court has kept the issue open, when the judgment in the case of Union of India versus Ashish Agarwal was pronounced, leaving the limitation aspect wide open, and the entire country is now asking this $1 million question, that what will happen to the reassessment proceedings for 2013-14 and 14-15 and even 15-16. So everybody is guessing, and in between this tug of war, some good news, some bad news keeps on coming. And recently, like Supreme Court, when it pronounced the judgment in the case of Red Chillies International, it was a sigh of relief for everybody, because the few high courts, like the Punjab and Haryana and Odisha High Court of late has not been entertaining writ petitions on 148, and it has been dismissing writ petitions on ground of alternative remedy. So this Red Chilli International judgment, basically where the Supreme Court came to the rescue of all by saying that the provisions for reopening under the Income Tax Act has undergone an amendment by the Finance Act of 2021, and consequently the matter would require a deeper and in-depth consideration, keeping in view the earlier case law. And accordingly, the Supreme Court directed the High Court to examine this issue regarding the issuance of notice under section 148A subclause B and then subclause D, order under section subclause D. The Supreme Court came rightly to the rescue and saved the entire jurisprudence, I will say, on this subject, because the law is fairly settled by the decision of right from the decision of Calcutta Discount in 41 ITR, when the Constitution Bench of Supreme Court decided that what are the grounds on which reassessment notices cannot be issued and entertain the writ petition and quash the notice under section 148, friends. So Red Chilli, though it is a very short order, I would say, but it can now be said to have settled that challenge to the jurisdiction to issue notice under section 148, 148A subclause B can definitely be made. And recently, on 16th of January, friends, that is hardly 2 days ago, Justice Sivanganam dictated an judgment in the case of Asiana Housing. Asiana Housing, the judgment has not yet been uploaded on the server, but when the dictation was being given, I was in the court, friends, and the division bench of Calcutta High Court had the occasion, because that judgment was cited. This judgment, Red Chilli International, was also cited. That was an intra-court appeal when the writ petition of Asiana Housing was dismissed by Honorable Justice Muhammad Nizamuddin, and the intra-court appeal was filed before the Calcutta High Court, and Calcutta High Court gave two options to the other side, department side. The Honorable High Court gave two options, that either we admit this appeal and call for exchange of affidavit, or we send this matter back to the single bench for deciding the writ, leaving aside the alternate jurisdiction point, friends. That is Asiana Housing judgment. I am also eagerly awaiting, because it will have it will help a lot of SSCs, in my opinion, in their handling the notices under section 148 of the Income Tax Act, friends. Now, friends, before I deal with some of the important judgments which I have noted down for discussing with all of you, to briefly recapitulate, very briefly recapitulate the entire controversy, entire law on the subject. And for that, I would take you back to the decision of Union of India versus Ashish Agarwal, which was pronounced by the Honorable Supreme Court in the month of May 2022, exactly on 4th May 2022, by Justice M.R. Shah and Justice V.B. Nagaratna. It was a division bench judgment, friends. And in paragraph 10 particularly, let us I would read paragraph 10 a little bit in order to give you in order to explain what I am going to tell you after this, friends. The paragraph 10 Supreme Court said that in view of the above and for the reasons stated above, the present appeals are allowed in part. The impugned judgments and orders passed by the High Court of Judicature at Allahabad and other allied tax appeals / petitions are hereby modified and substituted as under. Then the Honorable Court wrote down several paragraphs. The first paragraph says, the impugned Section 148 notice to the respective assessees which were issued under unamended Section 148 of the IT Act, which were the subject matter of writ petition before the various high courts, shall be deemed to have been issued under Section 148A of the IT Act as substituted by the Finance Act of 2021 and construed or treated to be so-called notice in terms of Section 148A subclause B. The assessing officer shall, within 30 days from today, provide to the respective assessees information and material relied upon by the revenue so that the assessees can reply to the so-called notices within 2 weeks thereafter. Then the requirement of conducting any inquiry, if required, with the prior approval of a specified authority under Section 148A so 148A subclause A is hereby dispensed with as a one-time measure. I am pausing here, friends. And I am again reading it. The requirement of conducting any inquiry, if required, with the prior approval of a specified authority under Section 148A subclause A is hereby dispensed with as a one-time measure vis-a-vis those notices which have been issued under Section 148 under the from 1/4/2021 till date. So friends, basically the purport of this judgment was, as all of you know, I need not tell you again, but that 148 notices were treated as notices having been issued under Section 148A subclause B of the Act. And within a time-bound period, the assessing officer was supposed to provide you with the information or material which is relied upon by him. And a time was given 30 days. And that's why all of us remember that when the judgment was pronounced on 4th of May, within 4th of June, the department had practically sent all the notices, barring in few cases, I think, where the notices may have been received even after 4th of June or thereafter, friends. Now, as far as the assessment year 2013-14 and 14-15 is concerned, all the high courts in the country, practically all the high courts in the country, barring one decision, I think there is one decision where it was a Delhi High Court decision in the case of Touchstone, I think. Touchstone Holding Private Limited, where even though the matter was related to 2013-14, but the writ was dismissed on grounds of alternative remedy. And this limitation point was not, could not find favor with the honorable judges in that case. All other high courts throughout the country are at present of the prima facie opinion that the notices for assessment year 2013-14 and 14-15, which have been issued under the old law after 1/4/2021, are barred by limitation. And therefore, whenever we are filing writ petition for these years, even now, you can find from the Calcutta High Court orders that even 16th of January, 17th of January, on daily basis, at least not less than 20 writ petitions are being filed. And if these writ petitions are related to 13-14 and 14-15, then court just listening to the assessment year, and if limitation is the point, then court is giving the order that okay, the proceedings are stayed and the department is being asked to file affidavit in response, and the matters are being now listed in the month of April 2023 or May 2023 for being decided after exchange of affidavits. That is the position as far as 2013-14 and 2014-15 assessment year is concerned, friends. There are a lot of orders in this, as far as these years are concerned, right from the order of SS Comotrade Private Limited, Calcutta High Court, which was decided on 25th of August 2022, to then recently Sri Ram Plywood MGF Company Private Limited. It was for 2013-14, and this was decided on this writ was admitted on 16th of January 2023. So 13-14, 14-15, no questions asked, writ is being admitted, and all of you who are having any such notice which has been issued to you, my advice would be to approach the writ court directly, unless I am repeating, unless your matter does not warrant that you should go to the court. It is not of that nature, the stakes are not that high. Still, you can take this limitation ground even before the officer, that he doesn't have the jurisdiction. That should be your prime response in all the replies which you file in relation to these proceedings. Your primary response should be that it is beyond jurisdiction in view of your understanding of the law, and you can very well carry forward that jurisdictional issue before the higher authority, still tribunal and others. You need not approach the writ court. Writ court is only to be approached when you want to stall the proceedings so that the assessment order doesn't get passed, and you are you are saved of the consequential whatever the issues are there when the assessment route is taken by you, friends. That is 2013-14 and 14-15. And notwithstanding the fact, there are some SSCs I know who were waiting on the source. I know some SSCs who were thinking that maybe let us wait. And if there is nothing bad in that, I think that if some order, favorable jurisdictional order comes, say Calcutta High Court pronounces one order in favor, then instead of going to the writ court, I can take the benefit, because any order which is pronounced, any judgment of Calcutta High Court is a binding precedent for everybody in the state of West Bengal, and the assessing officer cannot have the audacity to say that I will not follow this judgment because we have gone to the Supreme Court. He cannot say that. He has but to follow the orders or judgments of the Calcutta High Court, friends. But till date, there is no determination on that point, friends, as far as 13-14, 14-15 is concerned. So therefore, that is the only remedy, as I told you, friends. Now comes the question of 15-16, friends. And when I'm talking 13-14, that means all earlier year you can, I think I came across one assessment year 12-13 also. But if beyond 13-14, any year is a foregone conclusion. That's why because most of the notices which are born of contention between SSC and department is 13-14, 14-15. These are something, department thinks that they will get a lot of taxes. So coming back to 15-16, friends, 15-16, the question is that whether 15-16 also the limitation point can be raised. Because obviously department in all these cases has been raising the question of TOLA and the instruction number 1 of 2022, which was circulated by the Central Board of Direct Taxes. And courts, particularly I can tell you about the Calcutta High Court. Justice Nizamuddin is skeptical regarding 2015-16, and in some cases 2015-16 the orders have not been given on limitation ground. It may have been given on other grounds of challenge, but on limitation ground 2015-16 Justice Nizamuddin doesn't seem to be convinced a lot, friends. But on 13th of January, friends, one decision came for 2015-16 in the case of Dilip Desai. I believe he must be the famous Dilip Desai in our profession. Dilip Desai case is there on 13th January when the matter was listed before Justice Shekhar Saraf. And Justice Shekhar Saraf, the arguments in that case was the limitation ground was raised on 2 issues, both on 149(1)(a) as well as 149(1)(b). 149(1)(a), friends, is the normal limitation that which you are pleading for 2013-14 and 14-15, read with the proviso to section 149. And 149(b), friends, as all of you know, it deals with the limitation which has been inserted in the statute based on the criteria of the quantum of the income which has escaped assessment, which is now 50 lakhs. There are now 2 brackets. Up to 3 years, the income escaping assessment can be any amount, but beyond 3 years up to 10 years, the income escaping assessment must be in excess of 50 lakhs. And that too represented by assets. The definition of assets, also, as all of you know, was limited in scope when the provisions were introduced. However, that definition was expanded by the Finance Act of 2022, with effect from 1st of April 2022, where in addition to assets, several other things were covered. So, coming back to Dilip Desai's case, the Honorable Justice Shekhar Saraf, based on the arguments of the SSC in that case, has given a stay on grounds that he is prima facie of the opinion that the limitation ground as raised both under section 149(1)(a) as well as under section 149(1)(b) is eligible for getting a stay, and the department has been asked to file the response by way of an affidavit, and thereafter the SSC will file, and the matter is now listed in the month of April 2023. This is as far as 15-16 is concerned. And here, friends, Justice Nizamuddin also, Calcutta High Court, in relation to assessment year 2015-16 only, in the case of Rakesh Bhartiya HUF, which was decided on 29th of November 2022, had also taken a similar view as has been taken by Justice Shekhar Saraf. So, there are decisions of Calcutta High Court itself, friends, where 2015-16 also limitation point has been raised by the SSC. He may or may not fall within 149(1)(b), that is 50 lakh criteria, may or may not be applicable. Suppose there is a SSC whose income escaping assessment is 5 crore and the matter is related to 2015-16. In such a situation, the limitation of 149(1)(b) related to 50 lakhs cannot be claimed, but 149(1)(a) definitely, because the 2015-16 notices under the old law could have been issued within 6 years from the end of the assessment year, that is within 31st March 2022. And since the notices have been issued after 1/4/2022, then in that case, the limitation ground works in relation to 2015-16. Though department is obviously not agreeing, and they have not yet filed, though in some of the cases, the time which was given to the department for filing the affidavit, reply affidavit, has expired, but department has not yet filed the affidavit. Presumably because this is a countrywide issue, friends, and they have to take a synchronized stand throughout the country. They cannot afford to file affidavits in a reckless manner, where different views, different reasonings are given by the department across different high courts. So basically, the affidavit will come from the horse's mouth from Delhi itself, I think, in all such cases, and it may take some more time. I may be hoping for a lot that maybe if our honorable finance minister, when she pronounces the budget in next 2 weeks' time, maybe that if this issue gets some sort of direction, to end this litigation, I don't know, that may be too much for asking. Until then, friends, even if the matters are settled in single bench, then it will go to division bench, and division bench, then Supreme Court. The litigation round which continued under the earlier context will definitely continue here also. So that is, friends, 2015-16. Now, friends, coming to the next 2016-17, 17-18, 18-19, and onwards, all these assessment years, the question of limitation based on 50 lakhs limit is being accepted by the courts. Recently, also 13th of January, friends, in the case of Rohit Shukla HU of assessment year 2016-17, matter was related to below 50 lakhs, and the stay has been granted. Exchange of affidavits have been ordered. Same day, 13th of January 2017-18, Rajesh Kumar Kothari HU of Calcutta High Court, again below 50 lakhs. Here also the stay has been granted, and the department has been asked to file the affidavit in reply. So in the later years, if it is below 50 lakhs, the courts are coming to the rescue. In one of the cases, friends, Hentech, it's a Hentech case where the matter was related to 2 lakhs only, and it was, I think, the assessment year was, I think, 18-19, and there the court has quashed the notice under section 148, not exchange of affidavit. Or notice has been quashed that the matter relates to only 2 lakhs, and based on information also, the court was convinced, Justice Nizamuddin was convinced, and the notice for assessment year 2018-19 has been quashed in that case, friends. Now, friends, with these discussion about these year-wise notices, friends, let me come to a few important points which are now arising or maybe erupting out of the proceedings which are now continuing in case of all the SSCs. As all of us know, the notices under section 148A subclause B was being issued, and after issue of that notice, the time, it was a so-called notice, and the time was being given to the SSC as per section 148A subclause B, because 148A subclause B now mandatory provides for a mandatory time to be given which is now, which is not less than 7 days. So the assessing officers were giving the notice under section 148A subclause B, giving you 7 days time, giving you information which in their opinion was information which was sometimes written in the body of the notice itself or sometimes enclosed as annexure to the notice. And based on that notice, so-called notice, the SSCs are or SSCs were filing their response. And thereafter, as a routine matter, the orders under section 148A subclause D getting passed and 148 notice being issued. This is what is happening till now, friends. All of you will agree with me. However, friends, what is important to note is to revisit the provisions. Let us read the provisions of section 148A once again, minutely, with utmost attention. The 148A has a heading. The heading of the section is conducting inquiry, comma, providing opportunity before issue of notice under section 148. This is the heading of the section, friends. The heading can also be resorted to for interpreting the section. That is no longer res integra, friends. There are catenary of judicial decisions in this regard. That heading can also be relied upon, friends. So that is why I am giving emphasis on heading also, because the heading says conducting inquiry. Now, friends, 148A, the section says the assessing officer shall, before issuing any notice under section 148, subclause A says conduct any inquiry. Mind it, conduct any inquiry if required, with the prior approval of specified authority. So even for conducting the inquiry, the approval of specified authority is inbuilt in section 148A subclause A. With respect to information which suggests that the income chargeable to tax has escaped assessment. The provisions of section 148A subclause small a hardly read 3 lines, but ये 3 लाइन में जैसे इसमें सागर समा हुआ है 148 का, I will say, because this shows the intent of the lawmakers when the old law was replaced by the new law, and when the manner in which the 148 notices were being issued under the earlier law and which were being dealt with in line with the decision of the GK and Rights Act 259 ITR. That is the background in which the new law has been enacted, and that is the background in which I am reading section 148A subclause Roman small a, friends. And friends, luckily for us, we are in Calcutta, I would place before this house, friends, a very important decision of Calcutta High Court, which I would recommend all of you to thoroughly read that decision, friends. In my opinion, the decision which I am citing is one of the finest decision by Justice Sivanganam, P.S. Sivanganam, which threadbare deals with this section 148A subclause A, friends. This is the decision of Justice Sivanganam and Justice Bivas Pattanayak, which was pronounced on 25th of August 2022. In the case of SWAL, SWAL Limited versus Union of India. And it was argued by none other than senior advocate Mr. Ranjit Kumar Murarka. And friends, what were the points of argument in that case? We must note and we must thoroughly engulf ourselves, I will say, into that. The appellant in this case argued that when the notice under section 148A subclause B was given in that case, friends, which I explained earlier. And after explaining 148AB, I took you all to 148A, 148 capital A, within bracket small a, which deals with conducting of an inquiry with the approval of the specified authority based on the information. So friends, from the notice which was issued to the SSE in this case of SWAL Limited, it was seen that the main page of the notice was a pre-printed form. And the SSE argued in this case that, my lords, it has been falsely alleged that the details of information and inquiry, if conducted, are enclosed with the notice in annexure. I am laughing because it was rightly held to be false, because no inquiry as warranted under section 148A subclause A was conducted. And the SSE further argued that it is further submitted that annexure A appended to the notice merely required the SSE to furnish all bank account maintained during the period under consideration and details of alleged funds received with documentary evidence, and therefore it is in the nature of general inquiry and not a notice under section 148A subclause B. Moreover, it was also argued that the information / material / facts mentioned in the order dated 12th of April 2022 were never disclosed to the SSE, and they were never given any opportunity to deal with the same. So friends, here, and let me deal with the annexure also a little bit. The annexure to this notice, this case notice, because it's a very important case and it will solve a lot of SSE's problem if this case is properly read and properly applied in practice in the cases which we are dealing day to day. This will be of great help along with another case I am telling you, friends. The annexure says, you had invested in penny scrip of Messrs. Sunstar Realty having scrip code ITNA to the tune of 58 lakhs and ITNA respectively. You are requested to furnish over online all bank account maintained by you during the period under consideration, nature of business carried on by you. In view of such facts, you are requested to furnish submission regarding certain clarifications, and then ITR is called, other bank account details are called, evidences are called, how such amount as all this information in the annexure A was called for in this notice under section 148A subclause B. And it was at the end, it was written, you are requested to explain why notice under section 148 would not be issued in your case to reopen your assessment for the relevant year on the basis of adverse information received against you. So friends, when we are visited with a similar notice under section 148A subclause B in the normal course, which we treat to be a so-cause notice, and we start complying with the so-cause notice by rebutting the contentions as made, we never ever think, we never ever give deep thought that whether 148A subclause small a has been complied with or not. Because before the notice under section 148A subclause B is issued, he has to first, if you are going to second floor, you have to necessarily go through the first floor. You cannot jump to the second floor directly. So when you are going to subclause B, you must necessarily follow subclause A. If you have not followed subclause A, then subclause B you cannot go into, friends. That is the argument which was taken, because subclause A, as I read, says conduct any inquiry if required, with that too with the approval of a specified authority, with respect to the information which suggests that income chargeable to tax has escaped assessment. That is the primary thing which has to be done by the assessing officer before jumping into 148AB. And if you can demonstrate that he has not conducted any inquiry as required, because it is very simple. Conducting of inquiry means he can, even if he has got certain information that I have dealt with in penny strip, I have dealt with in, I have made bogus purchases, I have made unaccounted sale, whatever kind of information he has, he is under, he has got all the powers to issue a notice to you to call for the information and seek information from you itself and then decide and take a call that whether the information which has been supplied to him in accordance with the risk management strategy and other issues, whether that information is correct or not. And once he has arrived at a conclusion on the basis of the inquiry which has been conducted, that too, I am repeating again, with the approval. You can seek approval also in this decision, friends. This was one of the argument, that you kindly give me the copy of the approval which you have taken in pursuance of the inquiry which is said to have been conducted under section 148A subclause A, which was not given. And therefore the court was convinced, friends, in this case Justice Sivanganam was convinced. I'm taking you to the last page number 22 of the order, where the judges say that accordingly direction is issued to the assessing officer to conduct an inquiry after receipt of explanation from the assessee. The assessing officer, before conducting inquiry as directed above, is directed to furnish full information as sought for by the assessee within 15 days from the date of receipt of the server copy of this order. On receipt of such information, the assessee is granted 10 days time to submit written reply, after which the assessing officer shall proceed to conduct an inquiry as provided under Clause A of Section 148A, and thereafter proceed in accordance with the law. So, friends, 148A subclause A must always be kept in mind, including this judgment of the jurisdictional High Court judgment for us in Calcutta. For others, it may not. It has got persuasive value. It may not be a jurisdictional High Court, but 148A subclause A compliance should always be sought for, which is based on the notice, so-called notice, which is given to you, from which itself you can make out that whether any inquiry which is required to be conducted has been conducted or not, and whether approval as warranted has been taken or not. Then only you can come to 148A subclause B. If you do not do so, then writ court is appropriate court to challenge, and this decision in similar situations, if you cite this decision, even the single bench of Calcutta High Court is bound to follow this decision of Calcutta Division Bench of Calcutta High Court in my submission, friends. Then, friends, the 148A subclause B, as all of us know, that 7 days, minimum 7 days time is required to be given, and then he should give you the 148A B subclause notice which is given to you with the information and material which is relied upon. That also is required too, because at this stage, at the stage of issuing the notice under section 148A subclause B, when the assessing officer is supposed to have completed the inquiry and he has done the matching of the inquiry with the information which he has, and he has arrived at a conclusion that in his opinion the income chargeable to tax has escaped assessment. Thereafter 148AB is issued to you, calling for your, it's a virtually a so cause, that still if you want to say something, you can still explain. You are given the right of hearing. The principles of natural justice, right of representation is given under the law which was given under the earlier law after the receipt of notice under section 148, when you could have filed the objections, and after getting the reasons recorded in writing. All those procedures were prescribed under the earlier law. And in the case of Divya Capital, Delhi High Court, which was reiterated by Honorable Calcutta High Court, reiterated this, the decision of Divya Capital was followed by, in the case of Salasar Services Insurance Brokers Private Limited, by Honorable Division Bench of Calcutta High Court, which was in relation to 2014-15, and the decision was pronounced on 2nd September 2022, when Justice Sivanganam made an important observation that information under the new law is equivalent to reason to believe under the earlier law. To that extent also he has said, and he followed the decision of Divya Capital and Excel Commodity and Derivative Private Limited, which was Calcutta High Court's case. And in that case, friends, this circular of CBDT came to the rescue of the SSC, because all of you must be aware that CBDT has also issued one circular which was issued on 22nd of August, I think. That circular has been issued where CBDT also has given directions to the, yes, it is 22nd of August 2022, where instruction was given by the CBDT. And I am reading one particular para which has been reproduced in the judgment of Salasar Services also, where the CBDT says, before initiating proceedings under section 148, any information available on the database / portal of the Income Tax Department shall be verified before drawing any adverse inference against the taxpayer. Information is only given. Lot of SSCs have been issued notice under so-called notice under section 148A subclause B, along with an annexure, which annexure is a plain paper, 4 pages of typewritten, 4 pages have been given. I know I have dealt with several cases where the heading is case related information detail, and there a story has been written that this company bank account is here. There were so many transactions between this company and that company. Hundreds crores moved from this company to that company. This bank account was this, and then you are the beneficiary, and therefore your income chargeable to tax has escaped assessment. This is the information which has been given. Case related information detail, then packet information, and there are some printed sheets also, which are the information which is uploaded by ADIT and DDIT in accordance with the risk management strategy on the VRU portal of the CBDT. That printout has been taken by the department. With that printout, 100 of like in those SEBI stock option matters, this particular format has been utilized by the department, or the department has utilized the Falcon, I think Project Falcon report. They have enclosed they are based on the Project Falcon. And when you see Your name is not there in Project Falcon anywhere. It is very easy to search the name these days. In the PDF, you can simply type your name and it will show you how where the particular name is disclosed, and it doesn't find anywhere. So based on 100 pages Project Falcon report, which is said to be the annexure, which is supposed to be said to be the information relied upon, the notice under section 148A subclause B has been issued to you and you are asked to show cause. So here this CBDT circular dated 22nd of August 2022. Again, I am coming back to this. It is not out of place to mention, CBDT says, it is not out of place to mention here that the information made available oblique data uploaded by the reporting entity may not be fully accurate due to inter alia error of human nature, technical nature, etc. Therefore, due verification may be carried out and opportunity of being heard be given to the taxpayer before initiating proceedings under section 148 of the Act. The supervisory authorities are hereby advised to keep an effective supervision so as to ensure that all extant instructions, guidelines, circular, SOPs are duly followed by the assessing officers in their charge. The supervising authority, the supervisory authority which has been spoken about, not only refers to the immediate bosses of the assessing officer, but I think the approving authority under section 151 also, where, as I told you, even for conducting inquiry, the approving authority under 151 has to give approval. And again, while passing the order under section 148A subclause D, the mechanism of approval under section 151 has been prescribed, and that too, when you compare with the earlier law, the authorities were little down on the rank, but this time, when it is matter of beyond 3 years, the authority is none other than Principal Chief Commissioner. And even up to 3 years, it is Principal Commissioner or Commissioner. So friends, this circular of CBDT came to the rescue in Salasar insurance brokers as well as in Dibya Capital's case. And Justice Sivanganam took no time in deciding the issue in favor of the SSC. I am reading from the judgment, paragraph number on page 5 of the judgment. The learned judge says, whether it is information to suggest under the amended law or reason to believe under erstwhile law, the benchmark of escapement of income chargeable to tax still remains the primary condition to be satisfied before invoking powers under section 147 of the Act. Merely because the revenue respondent classifies a fact already on record as information may vest it with the power to issue notice under section 148A subclause B. If you have the information, okay, you can issue notice under 148A subclause B, but would certainly not vest it with the power to issue a reassessment notice under section 148, post an order under section 148A subclause D, friends. This was Salasar brokers case. So friends, coming back to 148A subclause B, which we are dealing, where the notices are being received, so-called notices, so-called so-called notice, I am saying, because I feel that the notices are not really so-called notices. They do not give all the what is required to be given as per the law. Recently, friends, on 4th of January 2023. In the case of Wizard Marketing Private Limited versus Union of India and others, again, Justice Sivanganam and Justice Hiranmay Bhattacharya's bench was dealing with a similar matter in relation to an order which was passed under Section 148D of the Income Tax Act. And the SSC was relegated to alternative jurisdiction by the single bench of Calcutta High Court. And here also, the SSC argued that I have not been given any information. Here also it was related to case-related information details was furnished. Under the column packet details, packet source description, it has been stated data of non-genuine profit oblique losses in illiquid derivatives on BSE and USE. Information details pertains to certain currency derivative losses pertaining to transaction done through Trainer Securities Trading Private Limited. For the purpose of taking a, this is what is, I'm reading from the order of the learned court friend. And here also, the SSC wanted the information, wanted the link, wanted the live link between the information and the SSC and the reassessment proceeding, the live link, friends, which was held in the case of Hindustan Lever Bombay High Court 232 ITR, that there must be a live link between the reasons recorded in writing and the notice which is issued. And in that case, Bombay High Court went to the extent of saying that you cannot add even a single word to the reasons which has been recorded by you in writing. You have to justify the notice which is issued under Section 148 on the basis of reasons as recorded. So here also, friends, the SSC contended that I have not been given any information. The packet related information details, the orders on the basis of which the Falcon report, etc. I have got nothing. There is no linkage with me. My name is nowhere linked. The statement which has been said to be recorded of the brokers or the entry operators, whatever as the case may be, I do not find any place anywhere. So please explain me. Please give me this information so that I can rebut the so-called notice which has been issued to me. But it went into deaf ears. And therefore, friends, the court observed that we are satisfied that the order dated 28th of July 2022 calls for the interference, and the appeal was allowed. Consequently, the order was set aside and the order dated 148D was quashed, and the matter was remanded back to the assessing officer for reconsideration, fresh consideration in the light of the decision of Honorable Calcutta High Court. This is Wizard E-Marketing Private Limited versus Union of India, friends. A very important judgment. And as I told at the beginning, on 16th, Asiana Housing decision, which is more or less on similar lines, where the Red Chillies International decision has also been discussed by the Honorable Court, and most likely to be uploaded in 1 or 2 days. So you can refer to that judgment also in relation to 148A subclause D, B notices which are being issued to you, and you should always seek information whatever is not given, howsoever small or howsoever big it may be, in order to see that you are the link between the information and the income escaping assessment. If it is not so, you can always challenge. Again, I'm at the cost of repetition, that you can always challenge before the writ court, or you can take the alternate route of assessment also, and there also you can raise all these jurisdictional issues. Jurisdiction to issue the notice itself. Raja Textiles case, friends, 87 ITR, I think, Supreme Court. Raja Textiles case, Supreme Court has clearly said that jurisdictional issue is always a subject matter of challenge before writ court under Article 226, and it cannot be, the SSC cannot be relegated to alternative remedy. When the jurisdiction to issue the notice, jurisdiction to pass the order is challenged, that can always be subject matter of challenge, friends. So 148A subclause A and B, and then friends 148A subclause C, what does it say? Consider the reply of the SSC furnished, if any, in response to the so-called notice referred to in clause B, and then finally the order under section 148A subclause D. Decide on the basis of material available on record, including reply of the SSC, whether or not it is a fit case to issue a notice under section 148 by passing an order with the prior approval of the specified authority within 1 month of the time allowed, etc., etc. So friends, this is the mechanism which has been prescribed in 148A subclause 148A of the Act. And then friends, regarding those cases where search has been initiated, all these procedures are not applicable, because in such cases the requirement of passing the order under section 148AD is not applicable. The law is diluted because it is search is considered to be a serious aspect, and obviously you cannot be given an opportunity to explain on all those things, though you are given opportunity further down the road. So friends, and one thing I have noted, friends, that it is not that in all cases the department also brushes aside the submissions which are made by the SSCs. I have seen in some of our cases also that when we have replied to the so-called notice which was issued under section 148AB, the same was considered, and the order under section 148AD has been received, where the reassessment proceedings have been dropped. And I am sure that the House also must have received, a lot of people must have faced similar situation. So it is not that in all cases this the proceedings are not being conducted in a proper manner. They are being conducted in a proper manner, but I think in most of the cases the percentage may be may not be that which is warranted as per the law. That is all I can say, friends. Now friends, having discussed the 148A threadbare, I think, including the few judgments which I am carrying, which are of recent, which have been recently pronounced. There are issues related to approval under section 151. That who is the approving authority? Who is the approving authority? Here one point which we have argued is that even if TOLA has been, even if assuming but not admitting that TOLA has led to the extension of the limitation, but say in a proceeding which was related to the earlier law, where the reassessment notice, say, was issued on 31st of after 1st of April 2021, which was issued under the earlier law. I'm not talking of the decision of Ashish Agrawal, friends. This is a separate issue where the notice has been issued under the earlier law based on TOLA, extension by TOLA, because TOLA had otherwise extended 1 year. So in that case, we have taken argument that even though the period may have been extended, but the period, the sanctioning authority up to 4 years is different than the sanctioning authority which was beyond 4 years. That is 4 years to 6 years. The sanctioning authority under the earlier law was different. So suppose in a case where it was originally a case related to 4 years from the end of the assessment year, but on account of the extension of due to TOLA, the reassessment was when it was done, it was falling in 5th year from the end of the assessment year. In that case, the argument to be taken is that the sanctioning authority in such cases would be one which falls within the bracket 4 years to 6 years and not the sanctioning authority within 4 years. In such cases, department has made mistakes. There is a Bombay High Court decision on this point, friends. Though I have not, though I do not have the citation just now, but this point is an important point to be taken, friends. Then, friends, one question which is important, which I felt to discuss with the House is regarding the risk management strategy. What is the meaning of risk management strategy, which is there in the statute book? Here there is one decision of Madras High Court, just Dr. Anita Sumant, in the case of, this is the case of S. Vincent versus ITO, which was pronounced last year in the month of August 2022, on 23rd of August 2022. Dr. Anita Sumant referred to the CBDT instructions where the risk management strategy, what is the meaning of risk management strategy, has been specified in the circular dated 10/12/2021 and 13/12/2021, where it is stated that risk management strategy means an algorithm for standardized examination of information by using suitable technological tools, including artificial intelligence and machine learning, with a view to reduce the scope of risk as decided by the board from time to time. And in that case, it was argued that this is not the information, but Dr. Anita Sumant in that case was not persuaded and said that I am of the view, categorical view, that there can be no fetters placed on the powers of AO to gather information. There can be no fetters relied on the decision, the very well-known decision of Puranmal versus DIT investigation, 94 ITR page 505. So the risk management strategy, what is the meaning of information? All those, now that under the law, the meaning of information is very widely worded, because information not only includes information as per the risk management strategy, but it includes even audit objection, information received in pursuance of section 90 and 90A, information which requires action in consequence to the order of a tribunal or a court. So the dispute regarding the order of the tribunal or the court being information, and therefore reassessment in pursuance of such order of the tribunal or court is not possible to be taken. And now suppose a decision comes like recently the Checkmate Financial Services decision came 3615A in the context of employees' contribution to Provident Fund, or there are other decisions also which have come. The department will now say that this is information to me in this form, and therefore I will be within my rights to issue the notice under section 148A based after following the procedure as prescribed. We cannot now take, even in the case of audit objection, we always used to take fall back upon the case of Indian Express and Newspaper Society 119 ITR and PBS BB's case. So friends, those cases may have been said to be the ratio of those cases may be said to be diluted. But by and large, I can say that the entire jurisprudence on reassessment, which is available with us from the assessment, from the Income Tax Act of 1922 till date, friends, we are in the year 2022. In last 100 years, and out of 450 volumes of ITR, right from 1933, ITR was started in 1933. So 1933 till date, friends, you cannot find a single ITR where you would not have any case related to reassessment under 148 or under the erstwhile section 134, section 34 of the Income Tax Act dealing with the reassessment, friends. That is the power, that is the tool available with the department, because reassessment is one such provisions. And I can say one thing good about the Indian income tax law, friends, that a lot of people complain that you see 6 years se time limit बढ़ गया, 10 years हो गया, all those things keep on coming. But friends, during the course of my research, I had the occasion to deal with similar laws across the globe, and when I found that in the USA, and similar Inland Revenue Service can issue you a notice to reassess without any limitation. There is no time limit. It can be even 100 years back, provided there are fraud or similar nature which leads to reassessment. So that way, friends, I must say that we are lucky that here the time bound criteria of 10 years has been made, and under the earlier law the criteria was 16 years for foreign income. That 16-year criteria is also not applicable now. It is 10 years only. So not beyond 10 years. And even as far as the limitation is concerned, the 149, section 149 clearly says that in respect of assessment year 2021, 22 and earlier years, the limitation of the earlier law will continue to apply. And therefore, on the date on which the assessing officer issues the notice, he must see whether it could have been issued under the earlier law based on the earlier law on that date. If the notice could not have been issued under the earlier law on that date, then even under the present law, the notice is bad in law. That is the position even under the new law, friends. Now, friends, I would place before this house one more important decision, which I have referred to in my book also, friends, which I feel that will be one of the important decisions whenever the courts are called upon to decide the limitation ground related to 2013-14 and 14-15. This is the decision of SS Gadgil versus Lal and Company, which is reported in 1964 53 ITR page 231. It is a 3-judges bench decision of Supreme Court, which was decided in the year 1964 on 30th of April 1964, where also this issue, here also the issue was related to somewhat limitation only, friends, because here the notice was earlier under the earlier law. The notice could have been issued within 1 year from the end of the assessment year. In certain cases, not in, it was a case of a notice was being issued to the agent of the non-resident. to the agent of the non-resident, the notice could have been issued within 1 year from the end of the assessment year, and that period was changed to 2 years by a particular Finance Act. And therefore, once the period was changed, the notice was issued in respect of an year, which was barred by limitation based on the 1 year criteria. And in that context, the Supreme Court 3 judges bench made certain important observation, friends. In this, all of you should read this decision in order to deal with the limitation clause 53 ITR case 231. Friends, here the important one, a few important lines I am reading, where the Supreme Court said a proceeding for assessment is not a suit for adjudication of civil disputes, that an income tax proceeding is in the nature of a judicial proceeding between contesting parties, is a matter which is not capable of even a plausible argument. The income tax authority, who have power to assess and recover tax, are not acting as judges deciding a litigation between the citizen and state. They are administrative authorities whose proceedings are regulated by statute, but whose function is to estimate the income of taxpayer and to assess him to tax on the basis of that estimate. Tax legislation I'm not reading it because it is not relevant, friends. But in a nutshell, in the case of S.S. Gadgil, the court refused to buy the argument that by extending the year up to which the notice could have been issued, you could have issued notice for a assessment year which was already barred. You could not have revived. That is what Supreme Court said in that in this case. So we are on an even better footing here, even though the period has been expanded from 1 year to 2 years, and in spite of that, you cannot issue notice. But in our case, the notice has been issued under the old law based on TOLA, based on the instruction number 1 of 2022, which has been threadbare dealt with by Honorable Allahabad High Court in the case of Ashish Agrawal, and which has been, I would say, that lot of people have still confusion, but I have no confusion in my mind. And I always say that the Ashish Agrawal decision cannot be said to be against the SSEs. Had it been against the SSE, then Supreme Court would not have said that all defenses available under section 149 are available to both the SSE and the department. They have nowhere said so. They have simply said that 148 notices which have been issued will be treated as 148A notice without the inquiry or without the approval, which I told you in section 148A subclause A. Without that, it will be treated as deemed to be the notice. And that too, what was the reason? The reason was that if the Supreme Court would have held all these notices to be bad, then there would be a situation where even some of the years this is observed in the order itself. Supreme Court has observed this, that for even those notices which were valid, ignoring the TOLA, they would also have been quashed. Because 17, 18, 19 also was the subject matter of challenge across the country. And so therefore Supreme Court was mindful of that, friends. And rightly so. Whenever we are going to the court has to look at both the sides. As they say, no, the lady is blind. The statute, the lady is the blind, and she has to see the what is in your favor, what is against you, and then to take a call, then to decide. And that is what the role was played by Honorable Supreme Court to give a balanced judgment, Justice M.R. Shah and Justice B.V. Nagaratna, I would say, I have never said that this judgment was against the SSC. I always say this judgment is in favor of the SSC. And that is fortified from the fact, my view is fortified from the fact that the Supreme Court uses the word that we modify the decision of Allahabad High Court to this extent. Had it been a reversal, then they would have said we allow the appeal of the department, and the decision of Allahabad High Court is decided against the SSC. That has not been said. It has been said that we modified the order of Honorable Allahabad High Court to this extent. When an order of Allahabad High Court has been modified to only some extent, that means that all other points on which Allahabad High Court gave the order have received the stamp of approval of Honorable Supreme Court. And if you read the Allahabad High Court decision in the case of Ashish Agarwal and bunch of other SSCs, paragraph 67 onwards, Allahabad High Court has beautifully dealt with the TOLA aspect and why the department cannot take into account the extended period by resorting to TOLA. So that's all. I think friends, I think I have come to the end of my deliberations, and now I am open to questions, if any, friends. Thank you.
Yeah, thank you. Thank you, sir. Thank you, Rameshji. Now requesting our delegates to ready with the questions, if they have. Starting with Anupji.
Sir's detailed deliberation actually left no question unanswered actually in my mind. So I am leaving it on other delegates, other literate or disabled delegates. They should ask questions.
Thank you, Anupji. You can now unmute yourself or raise your hands to ask the question.
Hello.
Yeah, Manishji.
Yeah, sir, I have a question with regard to the clause A of section 148A, which starts with saying that conducting an inquiry, and then it uses the phrase with prior approval of the specified authority. But in between these two words, there is if required. So I just wanted to get the clarity on whether this if required is for conducting of inquiry or for the prior approval of the specified authority.
No, conducting inquiry, in my opinion, if required, is for the purpose of conducting inquiry, in my opinion. If the assessing officer feels that he does not require any inquiry to be done, then he may not do any inquiry and straight away come to the 148AB. But here an important issue which arises is in my mind, an important question which you have raised, I must say, that a question which may arise is that whether in a case where the assessing officer says that in my opinion inquiry is not required, because if required is there is a decision on this point. I do not have that right now, but whether inquiry is mandatory or not, on that point there is a decision. So whether when the assessing officer is of the opinion that inquiry is not required, and therefore whether in such a situation also whether he is required to take approval of the specified authority or not.
Yes.
That is the question which arises. I would read it that even if the inquiry is not required in the opinion of the assessing officer, but if he feels that information is strong enough to issue a notice, it must be with the approval of the specified authority. I would read this as in this manner.
So, sir, can we say that even if the AO concludes by saying that no inquiry is not required, but that decision also has to be supported by the prior approval of the specified authority?
Yes, exactly, exactly.
Thank you. Thank you.
Thank you, Manishi. Any other question from the delegates? You can take one or two.
Patodia sir, you said ki why this judgment of Supreme Court in Ashish Agrawal's case, in particularly this cases of 148, the cases were opened between April 21 to June 21. The inquiry portion was dispensed with by the Supreme Court. Am I right, sir?
Yes, yes.
Particularly for these cases, which were for
Yes.
3 months window.
Which have been dealt with by the Supreme Court, or which were not part of the Supreme Court's appeal, but Supreme Court has exercised power under Article 142 and even said that this decision would apply to those cases also.
Okay.
But what the department is now doing, even if the case is not covered by in this criteria, they are taking cognizance of this decision and issuing notice.
Which is
So-
not fair. Which is not fair.
Which is not correct. One can challenge that. That no, you cannot be governed by this order, because that order is limited to that extent. That
So
can
there was
be
a specific dispensation of inquiry for the limited number of cases.
limited number of cases, not a blanket approval has not been given. Moreover, there is one more point which comes up is that Supreme Court has given clear-cut mandate that you have to give within 30 days the details, the information, everything you have to give. However, department has not given the entire information in one go. They are giving it part by part. That can also be a ground that the limitation cannot be taken to mean that it is an unending limitation. So if you are not given within 30 days the entire material which you have, and if you are giving me after 4 months, then your limitation is even otherwise barred by the decision of Supreme Court. That is the argument that one can take, in my opinion.
रिटेल टू डाटा खोज देते हैं ना नगर निगम वाला मामला
Yeah. So now I think all the questions, queries related to our today's topic, 148A reassessment has been completed. Last time we are asking if any query is there for our delegates, they can ask. Yeah, thank you, sir. Really, with this vast delegations of your on the topic, every doubt must be cleared in our delegates' mind. Now requesting Rajesh Ji Kakariya, our convener of past convener of study circle, to please offer a hearty vote of thanks to you, sir. Rajesh Ji.
Thank you, Sandeep Ji. Ramesh Ji, it was a very threadbare analysis of 148A. And 148A, small a, I think it has been ignored everywhere. So many discussions have been held, but 148A, small a, on that part, I've never gone through or never argued for that matter. Even in the read petition, I have not gone through anywhere that it has been argued about. So this point has recently been cropped up, or what? I have not asked you. So just I wanted to know about that. 148A, is it being taken now? And is anything on that, specifically the case laws which you have referred, that's well limited. After that, anything has happened about that?
No, Rajesh Ji, this 148A subclause small a
Yes.
has been, I would think so, that has been overlooked by the SSCs.
SSCs.
And even though this finest judgment of SWAL Limited is available,
Yes.
with us for almost last maybe 4 or 5 months.
Yes, August, it was told in sometime in August only, yes.
But the ratio of that decision has not been taken by the SSCs in the manner it should have been taken, in my opinion.
Right, sir. So, thank you, Rameshji, for giving this new thought, new idea about taking this point also. And this time barring, all the time barring would be on 31st March 2024 only, not 23. This because this 148A, 148 notices have been done in this financial year. So from this end of this financial year on 31st March 23, 1 year would be available after that for 1 year.
No, for the notices which are subject matter of challenge,
Yes.
that is the limitation clock has stopped. For that, the limitation would start running once the decision is pronounced, then only. Otherwise, limitation is stopped.
No, that is right, sir. That is for the REIT matters only.
Ah.
Otherwise, where there is no REIT.
When there is no rate in the normal course under 153, I think the time limit is 9 months from the end of the financial year.
No, in the website, everywhere it is 31st March 2024. Or in the website, the closer date is also there, no? The time barring date is there. So
I think it was from 12 months, it was done 9 months, but we have to check 153 section.
Okay. But,
Yes.
But the original 148 was issued in March 22. So that date would not be counted.
If the original notice was issued on 31st March 2022,
Right, sir.
and it is not subject matter of any challenge,
Right.
the assessment proceedings are being conducted in the normal manner,
Yes.
then the normal limitation under 153 is within 1 year, I think 1 year from the end of the assessment year in which the notice is issued.
But then it should be 31st March 24 on 23 only, not 24.
Yes, exactly. So a website may show anything. We have to go by the law as written in section 153. And I would advise that the date of receipt should be taken as the sacrosanct date, and on that basis, this limitation point should also be raised.
नहीं पटोदिया सर, जो एकदम स्पेसिफिक क्वेश्चन है 148A-B की सोकोज नोटिस आने के बाद जो केसेस फिट केस घोषित किए गए हैं, उस केसेस की 148 की नई नोटिस जारी की गई है जुलाई 2022 में. Am I clear, sir? You got a notice, SOCOS notice under section 148 capital A subclause B. You replied and your case was declared as a fit case, and you have been given an order under section 148 capital A subclause D. After issuance of this order under section 148 capital A subclause D, subsequent to that order, you also received a notice under section 148, which happened to be in the year 22. That is the month July 22 or August 22. So what Kankaria Bhaiya is saying, ki since the year of notice issuance is March 23, so from the end of the financial year, March 24 is the time barring limitation. This is what he is asking. Am I right, Kankaria ji?
Yes, that is the question.
So that is why I said that in those cases which are the writ cases, or where even though against the fresh notice you may not have filed the writ, but originally the matter was in writ. That is why you are now governed by Supreme Court decision of this Ashish Agarwal. So now the fresh notice under section 148 has been issued in July 22 or August 22 or whatever may be. So therefore, here the limitation would apply from March 23, 1 year from March 23, which is March 24.
March 24.
Yes.
This is what, thank you. This is what we are asking.
Thank you, sir. Thank you very much for your nice deliberations. We are very, all the audiences must have been highly benefited by this today's topics. Thank you very much.
Thank you, sir. Thank you.
Thank you.
Okay.
Sir, we are offering a e-token
Memento
for you, e-token memento, and
Okay.
physical memento will also be delivered to you, sir,
Okay.
because
So-
now the COVID is over. Yeah. Thanks a lot, sir. Thank you all
Ram
the
Ram.
delegates for joining.
Thank you, sir.
Ram Ram, Hari Ram ji, Ram Ram.
Ram Ram, Bhai Sahab, Ram Ram. Thank you, sir. Thank
Okay.
you.
So with your permission, can I now leave?
Yes.
Yes, sir.
Yes, sir. Thank you.
Yes, sir. Yes, sir.
Okay, thank you, sir.
Thanks.
Thank you, sir.
Now we are ending the session.